What's going on, bro? Welcome to another video. If you're new here, my name is David Esparza, aka David Gaines, and I'm on my journey of trying to become a profitable day trader. So, essentially, this week I came up with a new strategy for myself that's going to help me, become profitable, and I basically just wanted to share it with you guys. So, we're just going to go over the trades that I took this week to build confidence in the markets, remove any fear, greed, FOMO, anything like that that you are struggling with in your day trading. So, just first and foremost, these are all paper trades that I took just to reevaluate and build a strategy that I like to use, and I'm confident in taking the trades when I see the setup happening. So it's basically a mixture of two different strategies that I learned, and I basically just combined them together. So I had one mentor that taught me one thing, and then I went to another mentor. He taught me another thing. So I'm basically just putting them together and finding what really works best for me. That's pretty much what I think what trading is all about. Is because everybody's different, but every strategy does work. But it's all about becoming the best possible version of yourself. Everybody has their own problems, and it's up to you to solve those problems, self-reflect, and grow as a person in and outside of the charts. So without further ado, we'll go over the trades here. So it only actually took me 2 or 3 trades to pretty much just pass a eval, but we were paper trading, so that didn't happen, but brought me a lot more confidence. So uh, going into the market, we did have some big news. So essentially, this was the first trade that I took on the Nasdaq, and as you can see, this is like pretty much um, like my old mentor strategy. So you basically use like a EMA, and it's called like a pattern A. So you basically just want to see like a big move up, and then you want to see like some of these little doji candles form, and then on the next candle, if it opens strong on the side that you wanted to go to, um, you pretty much just enter at that point and just target a 1 to 2 risk to reward. So coming into the market, we were at all-time highs all this week. So essentially, what I saw, coming into the day was like this big move up, and then it came down, respected this Asia high. Pretty much just kept going at that point. So, like, honestly, if you really wanted to, if you were really confident, saw it, and you were on the charts at that, like during this time, you could have slapped an entry there. Just put your stops below that protected wick right there, where it respected that Asia high, and just honestly just let it ride. But as we keep playing around with this strategy and stuff like that, if you see the move, honestly, just take it, because if you're confident, you can honestly get some pretty crazy risk to reward trades with this strategy that I've noticed. So this was coming into Monday. So as you can see, the first trade that I took, I was actually using um, my other mentor's strategy. He kind of uses like ICT concepts and everything like that. So kind of took that little premature entry there. As you can see, that was the first one. And then the second one, we ended up executing on the pattern A, as you call it. But yeah, pretty much just slapped that and made back what I lost on this trade here alone. So that was going into Monday when we were at all-time highs, and going into Tuesday, I believe, is when I started to test some other things out, which is pretty much going to be like my strategy right now. So as you can see, you can have 2 screens opened up. So the first one is the main one is going to be this, pattern A. They're like Heikin-Ashi candles. You just change your chart to them, so that way they move into like averages of kind of like you kind of see like where the trend is at and how the market's moving. It's basically just what you want to look for, overall trend of where it's going to go, because you're looking for honestly a continuation in the direction that it's moving. So as you can see, on the left side here, we had like this big move down, and then it was kind of respecting this Asia, I believe the Asia high to continue lower, and then you had like London out. I always map out London session as well, and it pretty much just went down to the Asia low right at market open. So I did test something out. So as soon as kind of market open, I saw this candle close right here. Kind of tested some stuff out, but um, on the right side here, as you can see, we pretty much just came up and manipulated multiple times in this general range, and then when market opened, you had this big displacement candle to the downside. So that's a clear tell that price is going to go lower. So you have manipulation and displacement. Pretty much you just wait for the retrace, enter anywhere in this general range right here on the right side, and you can pretty much just target 1 to 2 or just let it ride. Honestly, in this general case scenario, you could have held all the way until the Asia low, but really just depends on what you want to target, how confident you feel in the trade. So yeah, pretty solid there. And then we went into Wednesday, which we did not trade because it was FOMC, which was pretty much, overall, like if you've back tested like FOMC, it really just has like bad price action, so it's really hit or miss. So there was a couple of trade ideas that I kind of took. First one, I was just messing around, right before market open. Kind of looked good because you saw like this big move up, we respected it, and then you kind of just want to continue up to the next draw on liquidity, which was the Asia high or the London high. But as you can see, right at market open, we got edged and then completely hit the stop loss. So that's why you don't really want to trade FOMC, because it really just, price doesn't give you the best, setups. It can do whatever it wants. But then as you can see, right after market open, we pretty much just dumped, came back up, did a little rebalance, and then just continue lower, which was the second idea. So essentially in this general case scenario, pretty much just did the same thing as Tuesday, manipulated some highs, and then you saw strong displacement to the downside. So you could have just waited for that retrace and then put your stops above any protected low, which was either this candle right here, that wick. As you can see, we barely got edged on the stop loss again. Or if you got a better entry, you could have put your stops above this market open wick right there. So if you look on the right side here, you can see this manipulation right here, strong displacement. Honestly, after this candle closed, you probably could have just entered, put your stops above there. Like I said, it really you just have to see it at that point in time, kind of know what you're looking for, and then pretty much just target 50% of the wick or the next draw on liquidity. But like I said, FOMC really can't know what price is going to do because it is a weird news driver. So, but yeah, like I said, was just testing some stuff out on this day. Really didn't execute any paper trades. So yeah, that was Wednesday, and then coming into Thursday, I believe we reached all-time highs again coming into the market. So pretty much what I saw here was we had like this high from London, and then we were also above the Asia range as well. And then right before market open, I think it was like 7:30 or so, we manipulated again, turtle soup, SMT, displacement, retrace, displacement again. So right at market open, I had mapped out on the right side there some fair value gaps. So I kind of wanted to see how price was going to react off of that general range. So as you can see, pretty much just came up, respected this 5-minute fair value gap, and then strong displacement. This was kind of like discretionary at this point. So it was like 1 minute right before this 5 minute candle closed. I pretty much just entered there because it had strong displacement. And then I was just going to target this external low right here. And that was my original TP. But then I saw this draw liquidity right here. So I didn't really know how price was going to react off of it. So I just moved my TP to there. And then, of course, it ended up just reversing on us and going the whole opposite way. So you could have caught both moves at this point. So pretty much what did I see? Manipulation, displacement, rebalance, displacement again. And then on the left side, what did I see? I saw displacement from the London high, strong displacement moved down, came up, respected this EMA, and we had the strong open on this candle right here. So you just enter, target the next strong liquidity. So yeah, it's pretty simple, as long as you're looking at the pattern A, the Heikinashi sticks. We are also on the 5 minute time frame, and then pretty much on the right side, what I do is just map out any draws on liquidity, like London session, and then any internal draws on liquidity, any fair value gaps that I might see, and pretty much where I want to see price react off in the general case scenario, right? So pretty good trade, I would say. Not the best. Honestly, I could have waited to catch a bigger move, but honestly, we're not trying to catch 100, 150 points, 200 points. All we're trying to catch is like anywhere between 30 and 50 points, or a 1-to-1. Sometimes it's 1-to-2, 1-to-3, but typically it's going to be 1-to-1. So that's what I'm most confident in, and that's what I'm going to stick with for now, up until we start passing accounts and ripping payouts, man. So that was Thursday, and then going into Friday, I believe we were at all-time highs again. So pretty much market was ripping all week this week, so pretty good. Friday was pretty shit, actually, if you ask me. As you can see, like the candles weren't moving how they were normally moving, pretty much just all over the place, wicking all over the place, no strong bodies or anything like that. So what the wicks do, they just cause a lot of damage and stop a lot of people out. They manipulate a lot, and you just got to be careful. That's why on Friday I didn't really take any trades. I was just testing out the strategy again, just having some trade ideas, just having a thought process in the market. So when I go into a live case scenario, I can execute how I want. So pretty much what I saw on this Friday was, let's see here, I believe this was London high. We had displaced above here, rebalance right into it, but we did not touch it. And then we just pretty much just ran to the upside after that. Like I said, if you saw this on the charts right before market open, honestly, you could have entered there. But market open is not the greatest, so I'm gonna try to stay away from it. But if I see the setup, I'm obviously gonna take it. And then, yeah, we just saw market open come up and yeah, rip through. I believe there was a draw liquidity right there as well, and a 5 minute fair value gap. So I was kind of hesitant to even enter this trade, but I did want to see how it played out. So I just put a long position there, and then just targeted the recent draw on liquidity there, and it ended up just displacing, rebalancing, and then ripping through to TP. So my original stops was down here. I didn't want to see price come back down to this London high. So basically, we came back down, but we just pretty much just bounced back up. So um, yeah, pretty risky trade if you did not have your stops in the right position. Uh, yeah, so that's pretty much the trades for the week. And my strategy, like I said, is just combining the two things that I learned from two different mentors. Pretty much just ICT concepts and um, Heikinashi candlesticks. Pretty much just moving averages and pretty much just combining them together and basing a trade idea off of there. Any continuation in any direction, pretty much just going to set some rules at this point in time. Probably two trades a day. If I lose two, I'm going to be off, and if I win one, I will be off as well. And pretty much just be patient, wait for the setup to happen, and see if it plays out, right? So it's pretty much what this strategy has taught me is you really got to be like really patient because you are on the 5 minute time frame, and it's just so much like easier to see in my eyes because it's a lot less noise. Whether if you were going on like a 1 minute time frame, because that's what I used to trade, or a 3 minute time frame. So yeah, just a lot less noise and I feel like it's a lot easier to read. So I'm pretty much just going to stick with this, and I am a firm believer that this strategy is going to make me profitable because for the past 2 weeks I was losing, and then um, going into this week I pretty much just won every trade idea. It was like 80 or 90%. Um, and I was also confident in the trades that I was taking. So we'll see how it plays out. Take it day by day, and pretty much just execute the markets. Really confident in the strategy because I've passed evaluations with it and I've gotten payouts with it. So pretty much just combining the two and everything that I've learned from both my mentors and just creating my own strategy, right? So like I said, but hopefully you guys enjoyed this little video. I kind of like making these trade recaps for you guys. So if you did enjoy the video, give it a thumbs up, hit that subscribe button, and I'll catch you guys in the next one. Peace.